Hi, g'day traders. Sam here from TradeToProspa to give you another crypto review. However, I'll be looking at the SP500 as it's a direct correlation, as many know. You can also look at the Russell 2000 or the Nasdaq in some correlation as well. But anyway, let's start. Looking at the SP500 in the past, I did talk about my thoughts on this, and you need to look at the previous videos as to why I'm bearish. Now, I'm going to focus on this level here. Um, what we have right now, just let's bring this out in bolder formation, I suppose, and change color. I think this is what we're doing. We're doing a wave 5 count. So we had that type of move. Wave 3 to 4 was a bear macro bear flag, and wave 5 could, based on this Fibonacci, um, come down to this level here. And let's have a quick look at that. So what we've done here, we measured the wave 3 to 4, and the fib extensions are pretty much here. So we've got our reference points there and there for the Fibonacci, and we've got these levels. Then we look across and we see that the correlation is to previous support. Right now we're at this level, finding support, previous resistance. So that's a very important neckline. We also have the 200 weekly moving averages coming into that pocket. And I did say in my last video that we might come below it to get some liquidity and go back up. And now we find the double bottom in a sense and the double top. I do have this level as a major resistance signified by that, and also this level here. And I don't think it will go any higher than that because the market conditions haven't changed. This wave 3 to 4, now we're doing wave 5. This is one target. This is the short term. I'm not even talking about the macro. And if we were to do, give me a sec. If I was to do this, swing high to swing low to swing high, our one's down here. Let's just put this back in here for a sec for the short term. We also have the one here, and then the fib extensions to the following areas. These Fibonacci's are the main targets for me. And then there's one further down here, wave 5. So this is my thinking. This is based on previous, excuse me, previous price action in bear markets. So let's just clean this up a bit. Now, if you look at on the daily, we go back. I am looking at this model here. And if we look at this section that has confluence with this, let me just clear those area up. And for the time being, I'll just move that away. You can see in this, and I've spoken about this a few times, and it's so far in line. So what we had was our first hit to this 200 moving average on the weekly. We had our bounce, we had our double bottom, and we had our rally, and then fizzled out. So you can pretty much say a head and shoulder type of formation. But what we had is the 200 weekly moving average always played our support, a hard area to lose. So what we done, very similarly, we had our selling climax, we had our rally, we had our another second bounce, and this could go there or further to that level to this Fibonacci pocket. So if we use this level or that level, we have two ranges. One is that and the other one is that. So we can potentially come higher as well. We can also use this trend line as the main, but you can see that this is not going well. So this is the middle of the formation. So you can say that we are doing something like this at the moment, or give about. Let's let's actually do it properly. Get the tool out. And you can see that we should come down to this level here for another support. And when you look at this, and we look at the history of many actions, we do come down for a fair bit, and then we come to retest the 200. And it wouldn't surprise me that we do it twice before we capitulate. And we had that somewhere, and I can't recollect here actually. There was one area that we found that motion, but there was another one. Just give me a sec. Although that's another one where you get to, it's not that spot there. It's not actually on this chart. There's more history to it. This is up to 2008. So if we were to just adjust this, stay with me. So on my right left, we have this ETF, SP500 ETF, and what we have is a level, and that's reminiscent of that level there. And you can see that it did its bounce from the, well, it's done its bounce, and what it's done is the 200 moving averages. See how it's done the double M. So if we were to drop this level, we're talking about the scenario of when we drop it, not for the time being, because for the time being we could still do that and then come back down, or just come down from there. When we do drop this level, it's going to be a very bearish sign. We're going to definitely get a bounce here. That is my moving average area where this is aligned. Let's just change that to a 3-day chart, and you can, it's not on this at all, but yeah, you can see a bit of support there. So I do think this is where we're going to bounce, hit the 200 weekly moving average, get a double top, and come down, and that's where we're going to see the capitulation further. And that's where I do believe what we have is the wave 3 counts, or the wave 5 in the macro. So I'm looking from a perspective of, this is our wave 1, wave 2, wave 3, and then up. And we need to see a bottoming formation of some sort. And you can see how in the past, when we lost the 200 moving average on the daily, sorry, the weekly, we have a bit of a bounce, and then it becomes resistance and we capitulate. Similar here, we have even though a bit of a loss of that level, we still go above, but once we lose it, we have that either double attempt or that one attempt in the following weeks or month. So I do see this. Once we lose this, we are going to be very bearish, and I'm looking for further downs. Like I said, this area where this is the 1.618 is my target, or potentially the 2, but this is where I'm looking at for this SP500, because the inflation is not going to go away and the interest rates aren't going to go away to control it all. And when we lose that, I suppose that's when new printing of fiat or the digital currency kicks in anyway. So that's what I'm looking at. What does it mean for Bitcoin? For Bitcoin, it means that we are likely to have a small, or so 21K or whatever it is, to 20, 22, 23K at most before we drop down. So let's have a look at Bitcoin. At the moment, I don't see why we can't. So we have this level, and it's very likely that we got this resistance band. I can't see why we can't do that, hit that level there. So if you look at the SP500 correlation, we can find resistance here and just come back down, or the next level and come back down, and then fizzle away all the way, or we can get this breakout and this fake out and then come back down. That's what I'm looking at. These 3 scenarios that correlate to the SP500, this particular area. So we have that resistance, so we can still keep going. We can do the other one, and so Bitcoin correlates to that area. So we're slightly bullish on the short term, but macro we're definitely bearish. And if I haven't shown you the macro chart, give me a sec and I'll show it. So when we look at Bitcoin, this is my chart, and I've discussed this on one or two occasions. It does fit perfect. There's another version of this as well. But if we were to lose this level, I'm pretty confident that this is a level that we enter to go long, which is roughly 13, 14K. And you can see that previous history shows that this is a main level. And if I was to do a Fibonacci extension, let's see what that does from there to there. Let's just put the fibs in. The 1.618 is very close to it. Give it, if you move this slightly a bit, give it a take. If I move this up a bit, or even slightly down to the wick, extend it, it's pretty close. So and it correlates to this area here. So if we look at this from there, that perspective, that level is level of interest. And if we look from another perspective, this bottom level is also a level of interest. So I'm going to leave that, guys. I'll talk about this in more detail, but for now, that's all I have. Talk to you soon. Cheers.